This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December the 8th. Our time is 8:44 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3 o'clock. And I should remind you, we will be on. We never like to miss a weekend. We're on, obviously, today, the 18th, and instead of being on Christmas, we don't want to be on Christmas Eve. We're on at 11 a.m. on 6:30 CHED, and then on January the 1st, we'll be on Sunday afternoon as usual at 3 o'clock, but we will never miss a show. Harold and I are of like mind. We want to be there with you every week, letting you know what's happening in the financial markets. On 6:30 CHED, Sunday afternoon at 3, the shows are archived on Harold's two websites, HESradio.com and RareColoredDiamonds.com. Connect with Harold at RareColoredDiamonds.com. Telephone number 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week, and it is an absolute gorgeous color, and we've had so many of those lately. The diamond is a .25 carat radiant cut, fancy, vivid bluish green. See it online, RareColoredDiamonds.com, featured diamond of the week. It is absolutely gorgeous. We'll talk about diamonds in the second half of the show. As we tape our show today, Mario Draghi coming out and saying the ECB can do more with quantitative easing, as their quantitative easing is heading for $2.4 trillion. You heard right, $2.4 trillion. That's the money they've printed. They've gone out into the marketplace and purchased bonds, hoping to stoke inflation, keep rates down. And Mario Draghi warned that the European Central Bank's newest stimulus push might not be the last, as it strives to reach its inflation goal. The intention of the monetary policy decisions is to maintain the extraordinary degree of accommodation in place, the ECB president told reporters in Frankfurt after the governing council agreed to add 540 billion euros to its bond buying program and extend it until the end of next year. So, Harold, that is just absolutely stunning news. 2.4 trillion, 540 billion. The program will continue until the end of 2017. It just goes to show how tough things are in Europe, and the money printing is very good news for obviously hard assets and the U.S. dollar, because people will move from the euro into the U.S. dollar, into U.S. assets without a doubt. And give us an update on where things are.
I certainly will, Randy. That is very, very interesting news. And again, it just boils down to the fact that you need to understand the currency markets if you're going to make money in today's world. And that's something that we've been right on top of. The U.S. dollar is up almost a full penny today. We're trading just above 101 at this particular point. So the U.S. dollar has broken par as we predicted. Now it's traded as high as 102. There was some resistance there, and the market had moved up so much so quickly that we saw some profit taking. It came back down to about the par level, the 100 level. Now it's up to 101.10. There's no doubt in my mind where the U.S. dollar is going. U.S. dollar is not only going to break above the 102 level very soon, but it's also, we're going to see a rise in interest rates in the United States that will happen this month, in my opinion, which will, even though some of it's been built into the market, is still going to add an awful lot of strength to the U.S. dollar. And the U.S. dollar is the strongest currency at this time. So, again, there's so much money coming into the United States right now that the U.S. stock market has broken 19,000, and every single day seems to be hitting new highs, new record highs also. So we anticipate that this is going to continue. U.S. dollar should not only break 102, next major line of resistance is 103.5. I'm predicting that we're going to not only see 110 in the U.S. dollar, but possibly much higher than that. So, as I've been saying for the last 4 or 5 years, is to get into U.S. dollar-based investments. That's where the big money is going to be made. If we stay in Canadian dollars, we're going to get hammered in this market. You know, the report came out that's in the newsletter this week about Canadian real estate, and it's quite frightening because the fact is that between Toronto and Vancouver, most of the real estate major moves have come from those two cities. So the fact is that both Toronto and Vancouver has imposed a tax on speculation, which is meant to slow down foreign investors from buying Canadian real estate. However, what that's going to do, it's going to decimate the market. And there's a reason why the Canadian government, who owns the banks in Canada, has decided on that C-15 bill, which means that the Canadian banks will, the Canadian government will not bail out Canadian banks. And we always scratched our head and wondered, why in the world will the Canadian government not back their own banks like the U.S. government did? And the bottom line is that the Canadian government has no faith in the real estate system, and they feel that the banking system is going to get in trouble. That's why they came out with Bill C-15, which means that they're allowing bail-ins. What that means, for those who don't understand what I'm talking about, is about 2 months ago, the Canadian government has approved a bill called C-15. There was many different factors involved in C-15, but the one that caught our attention was the fact that Canada is going to allow bail-ins. So what that basically means is that if the banks get in trouble, the Canadian government is not going to be able to bail them out like the U.S. government did in 2008 and 9. What the Canadian government is going to do is allow the banks to take the depositors' money and use that to pay off the debts of the bank. It happened in Cyprus back in 2011, 2012, and I know Randy and I reported on this almost every single week because we were appalled that not only was this allowed to happen, that the bank could actually get into trouble financially and steal the money or take the money from the depositors and use that to pay off the debts of the bank. And in return for that, they would give worthless shares in the bank. Who wants shares in a bank that's going under? So the fact is that happened in Cyprus, and we were shocked. I remember talking about it every week, that there was no demonstrations, there was no rioting, there was no people that, were doing anything about the government and the banks stealing their money. So we felt at that point that what was going to happen was that it was going to come to North America, that we are going to see that because all the banks are basically interjoined in the way that they do business. And lo and behold, 2 months ago, the Canadian government came out with C-15, which means that if you've got $500,000 sitting in the bank, as an example, you're insured only up to $100,000. So if that bank wants to take your money, they can take $400,000 of it and pay off the debts of the bank, and you would get back $100,000 only because that's all you're insured for. So please be very careful. And the fact that the newsletter this week does have a report in there that does definitely speak about the fact that and this is what it's called, Canada's housing market threatens the financial stability of our country. How frightening is that? So at this point here, and I've been saying this for a long time, get out of Canadian dollar-based investment. Join me as partners, and we can go into some of our private investments that are all done in U.S. dollars. My clients are making a fortune right now, not only on our investments that are paying over 25% a year, but on top of that, they're paying that in U.S. dollars. And right now, the U.S. dollar is almost at par with the euro, and soon will be the strongest of all currencies. So we still have plenty of time to get involved in these private trades and private deals. But again, if you just sit there and let all this happen and don't do anything about it, then you're going to be the same as everybody that just sat there and just didn't do what needs to be done. You need to be more aggressive at this particular point and not just sit there and accept what's happening financially, because decisions are being made for us when we should be making our own decisions. At this point, if the banking system gets in trouble and the real estate market gets in trouble, the Canadian stock market is going to plummet. Along with that, so will the Canadian dollar. What we are anticipating is that the U.S. dollar is going to trade at 110 or higher, and the Canadian dollar is going to drop all the way to 160 to 170. It means you're going to have to spend 1,700 Canadian to get $1,000 American. Why in the world would we not want to take advantage of that? We could make that money as opposed to paying that money, and all you have to do is go to the United States at this point and realize that what I'm saying is true. Right now, it would cost you about $1,330 to get Canadian to get $1,000 American. It wasn't all that long ago that the Canadian was actually stronger than the U.S. dollar, and now look what has happened. So at this particular point, we want to get out of Canadian dollar-based investments. We want to get into U.S. dollar-based investments, and I can help you with that. On top of that, watch the gold market fall. The gold market, basically, we put out a sell recommendation on gold at $1,380. It's now down to $1,170. We picked up over $200 on that trade, and a lot of our clients have made fortunes in those markets, taking our advice on gold, silver, the U.S. dollar, the Canadian dollar, and oil. At this particular point, there's very heavy support for gold at $1,160. We've hit that price 3 times already and have not been able to close twice below it, but that is coming very soon. In fact, it could come by next week. We would see gold actually drop below the 1160 level. I'm predicting that short term we're going to see gold hit $1,050. Not that we're not bullish on gold for the longer term. We certainly are. We feel there's enough problems in Europe and around the world that it's going to affect gold on the upside, just not at this particular point. We feel that gold has a ways to go further down, and a lot of that has to do with the relationship between gold and the U.S. dollar. You see, when the U.S. dollar is strong, gold is a weak commodity. So as the U.S. dollar gets stronger and stronger, gold is going to fall further and further. Now, we were one of the only analysts that called that market. Most other analysts that recommend trades in gold and silver have been very bullish on gold and silver and have been saying that gold's going back up to around the 1,100 level and possibly going to go up to 2,000. And where we do believe that those prices are definitely going to be reached further down the road, we feel that the market has got to fall before it goes higher. And again, that is directly to do with the relationship between the gold market and the U.S. dollar. So as the U.S. dollar gets stronger and stronger, watch for gold to fall further. Now, this is a very important fact that you should understand. Back in 2000, when Randy and I first recommended gold was at $250, and the U.S. dollar was coming off its all-time high of trading above the 110 level. So you can see what I'm saying. The U.S. dollar was at its highest point of 110, and gold was at its lowest point of $250. At that point, we felt that there was going to be a change in the marketplace. We felt that the U.S. dollar was going to fall, a lot of it to do with 9/11, and we felt that gold was going to rally. So we put out a very daring recommendation to sell all your stocks and buy gold at 250. And what happened was that turned out to be the biggest bull market of all time, because not only did gold go from 250 to 3, but it went to 5, to 1,000, to 1,500, to 1,900, the biggest bull market of all time. And while that was happening, the U.S. dollar was falling further and further. It dropped from 110 all the way down to 72 cents. So now you can see the analogy, and you can see the relationship between gold and the U.S. dollar. In the 90s, when the U.S. dollar was very strong, gold was at 250. In 2011, when the U.S. dollar was very weak, gold was at all-time highs of 1,900. Right now, we're seeing a rally in the U.S. dollar, which is why gold is going lower. Again, there's rhyme and reason to these markets. You just need to understand them. You know, our show has been on for 17 years now. What Randy said at the beginning of the show is 100% true. We have never, ever missed a show. I don't care if the holidays come out, Christmas and Hanukkah come out on the same day this year. And the fact is that we still do our radio shows on those days because there are so many people around the world, mostly in Canada, but we have clients and listeners worldwide that take our information and use that information to trade with. So again, we will never miss a show, and just because the holidays come out, on the day that that show will still be there. So again, we're very excited about what's happening in the marketplace. We've been hitting on all cylinders. We've been hitting the markets better than any other analyst out there, and we think that the best is by far yet to come. However, you do need to get out of Canadian dollar-based investments. Even your retirement savings plans are doing horrible. Nobody's made money in RSPs for the last decade, and they won't. If the Canadian real estate market falls as we're predicting, and the Canadian dollar falls further, the stock market's going to fall. Why in the world would you want to put your hard-earned money in a retirement savings plan that you make absolutely no money with? Give me a call. Let me show you what you can do with that money and how you can turn it into a U.S. dollar-based investment and make over 25% a year on that particular investment. So, again, at this point, Randy, everything seems to be falling into place. The gold market's down 260 today. It's trading at 1170. I think by next week we should have broken the 1160 to 1150 level. Silver, the same thing. We're trading right now at about 1680. I'm predicting that if gold goes to 1,050, watch for silver to go to around the 1,350 level in that area. The other thing is that the U.S. dollar is going to continue to rally very, very strong, and we want to take advantage of that. Give me a call. I'll show you how we do that without speculating in the marketplace, and that's the way I see things at this point, Rand.
Connect with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. As Harold was saying, he has private investments. Find out more. If you're stuck in a GIC earning less than 1%, think about it. Use the rule of 72. Divide your interest rate into 72. It will take 72 years to double your money. At 10%, you're looking at 7.2 years. And if you're in a GIC at 1% out of a retirement program, like an RSP or TFSA, you're paying tax on that. There's inflation. You're in a negative position, similar to what's happening over in Europe with negative interest rates. There is a better way to do it. There is a way to start making money today. Speak with Harold Siegel, 1-800-432-1022. The website is rarecoloreddiamonds.com. 1-800-432-1022. Website rarecoloreddiamonds.com. And our featured diamond of the week. Talk about diamonds in the second half of the show. It is a beauty. A 0.25 carat radiant cut, fancy, vivid bluish green. And we've had some amazing colors as featured diamonds recently. And this is another one of those museum pieces that comes out of the rarecoloreddiamonds.com vault that's hard to give up, but for some lucky investor, this will be a diamond that you will own and hold for many years. You could obviously wear it, and at some point down the line, someone in the family, if they choose, could auction it off and make a significant amount of money. See it? rarecoloreddiamonds.com, featured diamond of the week. Now, Harold was talking about it, so we'll get to that story about the Canadian housing market in just a second, but first we wanted to touch on what happened here in Canada regarding interest rates. Canada's key rate is set to lag, and that is not a big surprise. Canada is not going to follow the United States with any increases in interest rates. Bank of Canada Governor Stephen Poloz indicates he's in no rush to follow the United States, citing uncertain prospects for exports and business investment following the U.S. election. Policymakers maintained the benchmark rate on overnight loans between commercial banks at 0.5% and said a significant amount of slack remains in the nation's economy in contrast to the United States. Following the election in the United States, there's been a rapid backup in global bond yields, partly reflecting market anticipation of fiscal expansion in the United States, the economy there that is near full capacity. That according to the Bank of Canada. Now, that leaves Canada in a very interesting position because next week, the Fed in the United States will raise rates. The numbers are stating a 100% certainty the U.S. Fed will raise rates. Canada will not raise rates. We're more than likely going to see the Canadian dollar take a hit. It's trading at about 75.5 right now, so 75.53, right around there. But if the U.S. raises rates, we keep ours where they are, as we did earlier in the week. Canadian dollars coming down. There's even talk of the Canadian bank reducing interest rates at some point this year if the economy does not turn around. If the United States is raising rates, we're not. Look out, because we really believe that the U.S. dollar is going to take off, Canadian dollar go down. So get yourself situated now. Speak with Harold how you can get into U.S. dollars from Canadian dollars and take advantage of the moves that will be made by the U.S. dollar versus the Canadian dollar in the days, weeks, and months ahead. Connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website. Harold's a Canadian. I'm a Canadian. We want Canada to do well financially. We want our radio listeners to do well, build wealth, have a great retirement, be happy, healthy, and wealthy. That's why we do this radio show. There are stories we have to read at times that we don't like, but we talk about on our show optimism, pessimism, realism, and this is the realism of the situation. According to the OECD, Canada's housing market threatens the economy. And in 2017, it's going to be a terrible time for the average household. They didn't definitely didn't sugarcoat the housing situation in Canada. The report explained that we should expect a disorderly housing market correction. And I hope for fellow Canadians in Toronto and Vancouver that is not the case, but that is what they're predicting. They go on to say this is due to the notably overvalued Vancouver and Toronto markets, which they estimate to be a third of the national market. And they went on to explain how it threatens the financial stability of Canada. And the OECD is very concerned about the housing market in Canada because of Vancouver and Toronto. We have a chart. We have this story. Get it. Read it over. There's a chart, Vancouver and Toronto housing markets. You see Vancouver, you see Toronto, both parabolic lines upward. The rest of Canada sort of chugging along sideways, gradually going up over time. Vancouver and Toronto have gone parabolic. So we're in a situation now where we need to be realistic. What will it mean for us in 2017? At this point, we hope it's not serious because Canada's been through enough already. But there is, obviously, according to the OECD, a threat to our economy. And you need to, obviously, be prepared financially that your portfolio does not take a hit if we get into a situation where the Canadian economy starts to really unravel as a result of the housing market. Speak with Harold. He'll explain what you can do to obviously profit and protect from this situation in Canada with the Canadian dollar going down and the Toronto and Vancouver housing markets very unstable. Connect with him. 1-800-432-1022 or go to the website RareColoredDiamonds.com. If you'd like to read this story, we'll send it out to you via email, free of charge. Just speak with Harold. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December the 8th, 2016. The show runs on 6:30 CHED, Sunday afternoon at 3. Next weekend, we're on at our normal time, 3 in the afternoon. Now, Christmas Day is Sunday, so we're going to be on Christmas Eve at 11 a.m. 11 a.m. Christmas Eve on 6:30 CHED. And then we will do our first show of 2017 on Sunday, January the 1st, 3 o'clock in the afternoon on 6:30 CHED. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. We're also on TuneIn. We have our own YouTube page, and 630 Ched, they are on Apple Music. So lots of ways to connect with our radio show. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. Our featured diamond of the week. And it is another spectacular diamond, a .25 carat radiant cut, fancy, vivid bluish green. Now, a number of weeks ago, we had a .68 carat radiant cut, fancy green blue, and the color on it was one of the most amazing we have ever had as a featured diamond. We had so many people go to the website, RareColoredDiamonds.com, and click on Featured Diamond of the Week to see the color because it was so spectacular. And this diamond hits right in that wheelhouse, too. The color on it, Harold, and I encourage people to go to RareColoredDiamonds.com, click on Featured Diamond of the Week. They will see a very, very special diamond, nature's art, a fancy, vivid bluish green, .25 carat radiant cut. And these type of diamonds are so rare, the rarest of the rare, museum quality. And when you get into this range with this type of color, you're talking about a one-of-a-kind. And if you have that in your portfolio, it's something that many years down the line, you'll look back on and be so proud that you do have it in your portfolio and know that it's definitely appreciated over time in value.
Better believe it, Randy. And boy, oh boy, is that a gorgeous color. Now, it's only a quarter carat. However, these diamonds are known as the most concentrated form of wealth on Earth. So the fact is that to get a diamond that is this color is extremely rare. I mean, only one diamond in 100,000 is colored, and just because a diamond has color to it does not mean it's an investment quality diamond. A diamond like this, even though it's only a quarter of a carat, is extreme because, number one, mostly of the color. It's a fancy, vivid, bluish green. And blue and green are the two most sought-after colors in diamonds, and vivid has got the highest saturation of color. So even though a diamond like this is small, it's considered a very strong investment quality diamond that will never, ever decline in price. These are also known as portable private wealth. You know, the fact is we're starting to sell a lot of diamonds now in Europe, primarily because in Europe they're so concerned about their currency and about their overall economy. Well, we can certainly say the same thing about Canada, because as we, talk about what's happening around the world, the currency markets are the most important markets, and the thing about a diamond is that it can be sold in any currency. Right now they're priced in U.S. dollars because I'm a Canadian living in the United States and my business is in the U.S. However, we've sold diamonds in British pounds, in euros, in Japanese yens, in any currency. So that's another huge benefit of owning a diamond, is that, number one, it gives you stability. You're investing in an actual asset that will never decline in value. Number two, you're talking about an asset that will go up in value over time. Now, diamonds are not a short-term investment. You don't buy a diamond for a couple of years and then look to sell it. You're just not going to make the type of money. The fact is that the longer you hold on to a diamond and keep it in your family, the more and more wealth will be produced because of it. And the best example I can give you of that would be recently this year, I think it was about 4 months ago, that Shirley Temple's blue diamond came up for sale. Now, this diamond was purchased for her by her father back in 1940, so that was a long time ago. 1940 to now is 76 years. But within 76 years, the diamond was originally purchased for $7,200, and it's sold this year for $25 million. So let me ask you a question. If you bought an asset and you kept it within your family, and you didn't need to sell that for any particular reason and just handed it down from generation to generation, and all of a sudden, that asset that you were smart enough to purchase years and years and years ago for X amount of dollars is now worth 1,000 times that amount, that's got to come down as one of the best moves that you and your family have ever made. And that's what the diamond market is all about. Many times I've spoken about my wife's girlfriend, who this year inherited a 5-carat pink diamond ring from her grandmother. Story is that her grandmother bought it 50 years ago for $50,000. And today that diamond is worth $5 million. So that's the potential of owning a diamond. When you make any type of investment, you look, first of all, at capital preservation. Are you going to preserve your capital? Am I going to lose my money? Number two is capital appreciation, making money on that asset. And that's what diamonds give you that almost any other investment doesn't. Number one, you have capital preservation because a diamond like this featured diamond today will never, ever decline in value. You'll never see another diamond like this diamond. And number two, that diamond over time will increase in value more than almost any other market. So in today's world, where does somebody turn? We try to do the right thing. We work hard. We show up every day for work, and we do the best that we possibly can for our families. But the fact is that there's certain things that are out of our control, like what happens with the government, what happens with interest rates, what happens with market conditions and things like that. So all we can do is the best that we can possibly do. I've been in the investment business for 35 years, and I've always been somebody who's taken the other side of the trade, because 90% of the people that trade stocks and commodities lose their money. So why in the world would I want my clients sitting in something like a stock or a mutual fund where 90% of the people are going to lose? The last thing in the world Randy and I want is for our clients to lose their money. That's why we do what we do. In all the years that I've been in business, my clients have been able to invest with me in certain deals. And we do much better than the mainstream. As I mentioned at the beginning of the show, we've been urging our clients to get out of Canadian dollar-based investments and invest with us as partners in certain investments that we make. We've been in the rough diamond mining business for 4 generations. My partner's family has been in that business for 4 generations now, going on 5. They know that business very, very well. What I did was expanded that business and allowed our clients, our Canadian clients, to partner with us. So now our clients, where Randy said that right now, with interest rates at 0.5% at 1%, it would take you 70 years to double our money. Our clients are doubling their money in 4 years. And they're doubling it in American dollars, and the American dollar is skyrocketing and will continue to do so. So it only makes sense at this particular point that if you're not making money in your retirement savings plan, and if you're not making money trading in stocks and mutual funds or keeping your money in the bank at 0.5 or 1%, then you need to look for an alternative asset. And that's what we specialize in. We're in the alternative asset business. We don't trade stocks. We don't trade paper. We don't trade bonds. We don't do anything like that. We only buy the physical. And our clients are allowed to invest with us in certain deals that we do. We buy rough, uncut, colored diamonds that are so unbelievable, and we let our clients be our partners on those. And again, every transaction is done in U.S. dollars. So initially, yes, it is a little bit costly to change your Canadian to American. By judging by the fact that we are seeing a huge move coming in the American dollar and the Canadian dollar to fall substantially further, it makes a lot of sense at this particular point to make that move, to get out of your Canadian dollar-based investments, even consider liquidating your retirement savings plans that you will make no money with, and talking to me about going partners in our U.S.-based investments. So, again, at this point, Randy, we're ecstatic about our business and how it's moving forward, but we want our Canadian clients not to be caught up in all the problems that are happening, not only in Canada, but in the worldwide market.
Featured Diamond of the Week. See it? RareColorDiamonds.com. A 0.25 carat radiant cut, fancy, vivid, bluish green. The color on this diamond is one like you have never seen before. And it really does go to what we've talked about before. And that is the most secure and profitable investment, millions of years in the making. Rare colored diamonds, nature's art, private, portable, stable wealth. And that's what you see with a 0.25 carat radiant cut, fancy, vivid, bluish diamond. See it online, RareColorDiamonds.com, featured Diamond of the Week. There was an auction, Christie's Magnificent Jewel Sale. It was December the 7th, and in fact, we're taping the show on the 8th, so it was yesterday and last night. If you'd like to go through those results, we'll be happy to send them to you. Connect with Harold, 1-800-432-1022. And next week, we'll have some results for you on the show. There was also an article this week in the Wall Street Journal. We've had some excellent articles, one from the Financial Times of London, and the Wall Street Journal did an article this week called Colored Diamonds Glitter at 2016 Auctions. And they say that many of the stones that have been featured are absolutely spectacular. In May, the 14.62 carat Oppenheimer blue diamond set a record for a jewel at auction, going for $57.5 million, according to Christie's, which sold the gem in May. The day before, the unique pink, a 15.38 carat diamond that resembles a glittering Jordan almond, sold for $31.6 million at Sotheby's. And there's a quote here, "I think it's more of a coincidence than anything else that we're seeing lots more blues coming up for auction this year," according to Alan Braunstein, a colored diamonds collector and expert in New York. A year ago, the Blue Moon diamond commanded $4.03 million a carat auction. 6 months later, the Oppenheimer blue sold for just around $4 million as well. Colored diamonds are a distinctive masterpiece, said David Bennett, the Blue Moon auctioneer and the worldwide chairman of Sotheby's International Jewelry Division. "It's rather like having a great Picasso painting," he said. "Each one is different, isn't it?" In November, at Sotheby's, jeweler Salmer Halme made the winning $5.7 million bid for a 40.3 carat light pink diamond that he described as a mesmerizing stone the size of a bird's egg. Some buyers turn to colored diamonds for gifts, some for investment. And that, according to Heimel, it's a combination of both. Whatever their motivation, many collectors keep a low profile. It's not like a community of, yeah, hey, let's all meet and show our diamonds. Everyone is obviously very private about what they have. It's kind of a secretive and underground thing. Earlier this year, Hong Kong-based Chow Tai Fook Jewelry Group paid $16.8 million for the Aurora Green diamond. Scarcity contributed to the roughly $3 million per carat amount, said Rao Kanika, the international head of Christie's jewelry department. Large green diamonds are unusual, he said, and red diamonds are even rarer. Blue diamonds, pink diamonds also are very rare, with pinks just a touch easier to find. In roughly 2 decades, colored diamonds have climbed from $100,000 to $400,000 a carat at auction, Katika said, and that can go all the way up to $4 million. During the same period, white diamonds have appreciated, but not as much as colored diamonds because there's bigger supply, he said. And that's why, Harold, we love this market so much. It's the scarcity. Nature's art, but the scarcity when it comes to colored diamonds. They are so rare. They're so hard to find. And as we've said for week after week after week, there's an opportunity when it comes to pink diamonds with the Argyle mine in Western Australia. It's going to be exhausted here in approximately 3 years. I have read articles where they say they'll more than likely have a few diamonds in the vault for a few years, but after that, it's done. So we're looking at the mine being exhausted in 3 years. Maybe they keep some around for a few years in the vault for their Argyle pink tender. But then at that point, you have those with pink diamonds in their portfolio, in their vaults. They will control the price of these rare diamonds. 90 to 95% of those diamonds gone from the world supply because the Argyle mine is done. And Harold, I just have never, ever heard of an investment where that is the case, where they say, that's it, no more gold mining, no more silver mining, no more stocks. What you have here, though, is something that is so unique, so rare. 90 to 95% of the world's pink diamonds gone in 3 years' time. And then you're going to a secondary market and paying who knows what as time goes on for these rare, rare beauties, nature's art, museum pieces that are selling every month at record prices at auction.
You bet, Randy. It's really turned out to be an amazing thing. And again, the worse the world economy gets, the more people get it when it comes to an asset like this. You know, rare colored diamonds, classic cars, certain art pieces have sold for record prices. And when you really look at it, you know, we get enamored with the huge price tags that these, you know, that they get at auction when you see a diamond selling for 25 or 50 million. But in all reality, that's not the real auction diamond market. The majority of people don't have that kind of money. However, when you look at all of the diamonds or that are being auctioned off at these auctions, most of them are medium price diamonds. And they do way better percentage-wise than the $25 and $50 million diamonds. So there's definitely a market for $20, $50, $100, $200,000 diamonds, and it's obvious by the prices that they fetch at these auctions. We're going to have an auction in January. It's not going to be a live auction. It's going to be a several-day auction with several different types of products. It's going to be fun. There's going to be items like Iraqi dinars with Saddam Hussein's face on it, pieces that are nearly impossible to get. We have some amazing coin sets. We've got some phenomenal diamonds. And we're going to try to hold the auctions every single month. So what we're trying to do is build up our clientele not only in Canada, but all over the world. And I really do believe that our auction is going to be a hit. It has been in the past. We've changed our technology. We're now building a new aspect to our auction site that will allow us to do silent auctions on top of live auctions. So again, 2017 is going to be an amazing year for my companies, but mostly for our clients. Because again, the clients that are involved with us in our private deals are making over 25% a year, means they're doubling their money in 4 years or less, and they're making that money in U.S. dollars. It's an amazing time, and the reason that this has happened is that we've been able to call these markets basically dead on, especially the currency markets, which are making my company and my clients a fortune at this time.
Featured Diamond of the Week, 0.25 carat radiant cut, fancy, vivid bluish green. See it, rarecoloreddiamonds.com. Click on Featured Diamond of the Week, and there it will be. We had the story from Wall Street Journal, colored diamonds glittering at 2016 auctions. There was an auction on Wednesday, December the 7th. We're taping our show on Thursday this week, and we can send out the auction results to you. We'll have some on next week's show. It was Christie's Magnificent Jewel Sale, December 7, 2016, Rockefeller Plaza in New York City. A lot of stories coming out of Australia about pink diamonds. And now people there are turning to snap up pink diamonds to put in their retirement portfolios. This is happening in Australia. Now, there's a woman by the name of Catherine Peavy Tawartha who said that the trend for investing in pink diamonds has really taken off in Australia. This is something that obviously anyone can do, but she gave an example of one customer, and I thought it was quite telling. The customer decided to invest in diamonds after losing $35,000 on the stock market in one day. And she said another young customer had decided on diamonds because they were not ready to buy a house and were daunted by the thought of investing in the stock market. Other investors have been buying diamonds to pass down to their children as part of their inheritance. And Harold, that's something that you've talked about for a long time. I know that your grandchildren, they all have diamonds and will be passed on to them. You will have diamonds that will be passed on from generation to generation. But when you hear people losing $35,000 in a day on the stock market, a young person deciding that they see the stock market and are daunted by it. And that's a lot of the reports that we're getting from Bloomberg and Reuters and CNN Money. Millennials are very wary of the stock market. They're wary of what has happened. And it's not a surprise knowing that in 2000 we had the crash. Then we had another crash during the financial crisis of 2007, 2008. And they've seen some major hits taken by their parents and grandparents. And we're talking about people not being able to retire, people losing all their money. or having to take a part-time job to continue to supplement their retirement because they lost so much during the financial crisis. It's not a surprise that millennials are turning to alternative assets and taking a look at pink diamonds. And Harold, we have about 5 minutes left here.
Well, again, at this particular point, 90% of the people that trade stocks lose. So that's not an option. People that trade commodities, if you really don't know what you're talking about, especially if you leverage it, they lose. So that's not an option for most people. We don't leverage. What we do is we buy and hold. When we put out a buy order to buy gold, and when we do that in the near future, is to buy the physical, to hold on to it, so you can capture the entire move. People that trade in and out of the markets, they don't get that opportunity. They'll wake up one morning, the market will be up substantially, and they're not in the marketplace, then they're chasing the market. So, again, we don't do any of that. We're very conservative in what we do, but the returns that we make for our clients are extreme. And the reason that we do that is that my company is not controlled by making every penny that we can. It's much more important for me to have a company where my clients are successful. That's the true worth of my company. So that's why we do what we do. There's no doubt that the diamond market is going to continue to do well because, again, you're talking about an asset that is so difficult to obtain. And the fact is that it's a longer-term investment, but the returns are substantial. We will never get another opportunity to do what we're doing in the pink diamond market because there will never be another mine like the Argyle mine, a mine that produces 95% of all the pink diamonds in the world. So again, the opportunity to invest in pink diamonds is real. It's here right now. And the fact is that this will be the last opportunity that we will ever have to invest in a diamond that almost all of them come from one mine. So the fact is that this is like economics 101. When the demand is high and the supplies are low, the prices always go higher, and that's exactly what's happening now. We anticipate in the next 5 years the price of Argyle pink diamonds will absolutely skyrocket, and we want our Canadian clients to be involved in that market. It's very important, along with the fact that diamonds are priced in U.S. dollars, so not only will we get the appreciation on the dollar, on the actual diamond, but we'll also make money on the currency, and that's a double situation that will put us into strong financial shape.
Featured Diamond of the Week, a 0.25 carat radiant cut, fancy, vivid, bluish green. See it? RareColorDiamonds.com. Featured Diamond of the Week. Speak with Harold about investing in the different programs that he has, where you can start making money today. 1-800-432-1022. RareColorDiamonds.com is the website. And do not forget, earlier in the show, and we hope this does not happen, but we need to obviously be realistic and report what we're reading, and this is from a strong source. The OECD says Canada's housing market threatens the economy in 2017 is going to be a terrible time for the average household, and they go on to say that the problem is Vancouver and Toronto, and they are notably overvalued. They say they're estimated to be a third of the national market, and we have that story in our free weekly newsletter you can get from Harold. You can see the chart that we have, obviously Vancouver and Toronto going parabolic, those two markets, and the rest of Canada sort of going sideways to up. Also, we know that when the Fed meets coming up here in a week, they will raise rates, and more than likely the Canadian dollar will take a hit. We have that story on the Canadian Bank of Canada, Pelosi, the head of the Bank of Canada, keeping interest rates where they are. Harold, with about 30 seconds left, now is not a time to be complacent.
No, it is not. Now is time to look at alternative assets. Again, what's out there right now, you'll never, ever retire with. If you're in stocks, if you're in mutual funds, or if you've got your money in the bank, which you got to be careful of, you will never, ever retire based on those three things. So get in touch with us. Let us show you how you can make money as a partner of ours and get paid in U.S. dollars.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
How do you invest today so you can retire tomorrow? Speak with Harold Siegel, find out more. Get that story on the OECD and Canada's housing market. RareColoredDiamonds.com, the website, the telephone number 1-800-432-1022. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.